The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another wonderful and exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, what do we got going on today? Well, we had a little bit of country, a little bit of rock and roll. We're off 2 points on the S&P cash, although I think at the low we were down something like 20. Dow's still off 38, Nasdaq's up 15, Russell's up 5, crude oil's up 59 cents. What else do we have out here? Gold's down 70 cents, silver down 11. To 10-year bond, $2.66.4. And the VIX, although it was up earlier today, it's up about 4 cents on the last quote. So what else do we have happening? I got to find out a way to move stuff around. I got too many screens. I need one really big screen, I think. I'm not sure. Anyway, hope everybody's having a great day and going to have a great night tonight. We've got a 3-day weekend coming. It's very rough if you're going into Wednesday and you're up on the week to see a market actually sell off, one, into options expiration, which is tomorrow. And two, if you're moving up, you're probably the momentum's probably going to carry you into Friday. So it's not uncommon, as we said yesterday, in options expiration to see the market tend to go up on Wednesday, pull back a little on Thursday, go retest that high on Friday, and sometimes even go up a few extra points. Just turn the water up to full boiling and see who jumps out of the boat. What that does do, though, is tend to see a lot of the short sellers leave in the last couple of days of the week. Volume continues to be light, so that's not very bullish. In fact, you'd love to see the market sell off on light volume instead of move up on light volume. We're doing about a little under 4.2 billion shares right now. And again, that was on a backdrop of 7 billion yesterday. The afternoons have become rather light over the last week, which tells you there is a change in the character of the market for a great deal. Anyway, we get to options expiration tomorrow. I suspect that today's move down probably allowed them to get a lot of that done. Since it is a 3-day weekend, a lot of the big men on Wall Street will be headed off at the close tonight. So I'm assuming that a lot of the action that we saw today was a prerequisite for them to get in and out of positions so that they could see the market maybe close up 10 points by tomorrow, at least on the S&P cash, maybe 5 or 6. I could, what you would really like to see if you're bearish is this thing go up about 5 or 6 points on no volume through the entire day, and then a lower open on Tuesday when we come back. Not uncommon to see this. More common for 3-day weekends to see big changes in markets. Historically, more in the summer, but you still get them sometimes in the winter. And of course, we've got some various news out there. Certainly, the news about trade deals not coming together are not news. As we've opined on the show before, the people on CNBC want to try to turn this into the same kind of horse race that they turn elections into. Not a lot of substance, a lot of, well, he's one nose ahead, he's another nose ahead in a race that's going to last another 4 months. So it's not going to get settled quickly. I don't know who fired this idea up. I think there's blame to go around. These things take months and generally years to work out, so I wouldn't get too excited. Now, of course, this morning we saw pretty much a lower open on lower retail sales. I didn't watch any TV today, but I could just about bet that everybody's going to say, well, you know, it was miserably cold weather, so people didn't go out and buy stuff, which is a pretty fairly decent explanation to it. And I suspect that if when we come back tomorrow, that CNBC will be lined with people saying that. In the meantime, a little bit of news gave them everything they needed to get rid of a lot of positions, and they'll turn a 3-day weekend into a 4-day weekend. So I'm looking for, at least hoping for, the opportunity to see a little bit of rise over the next, what is it now? 6.5, 8.5, a little less than 8.5 hours of trading before we get to this weekend. But we're going to go through it. There's still a ton of stocks out here, and ETFs. They're up from the lows on very light volume. If you're long, you need to kind of move your stops up. I did that in a longer term position today in the Tech Insider. The first rule, lose no money. Second rule, follow the first rule. So I've got a position, and I was hoping for maybe a little bit different movement this week. Didn't get it. And so I'm even on a stock that I think can vastly outperform the market, even in a downturn, you just don't need to take the risk. So move your stops up, make sure that they're there come Tuesday. I don't think you got a lot to worry about the next day. The only thing we do have, of course, is after the bell tonight, we've got NVIDIA and AMAT. So we'll have a little bit of movement in the SMHs tomorrow. But I think a lot of the news is kind of baked in. If I had any idea on NVIDIA, I'd probably put a position on. But, man, they've done everything. In fact, I'll talk about it later when we bring the chart up. But they've done everything to cloud just about everything that I think I know about their sales. They've got about, they normally had like 3 or 4 different cards out down the high end. They've got like 10 or 12 announced already. There's a lot going on in NVIDIA, and it makes it very tough to figure out exactly what's happening under the covers. I'll be watching the earnings call after the bell tonight. But, they're probably not going to get back any, which they only had about a quarter of the Bitcoin mining business. AMD had a lot more of that. The real question is, they've got a lot of memory. They bought a lot of memory when things slowed down. They still have a lot of it. We need to see how much of that they've got and whether or not sales are starting to pick back up for games and stuff like that. It hadn't, you've had pops, but nothing real clear in the gaming market that has driven a lot of people to go out and buy new hardware. Anyway, we'll be back in just a minute. We'll do a little bit of histoire. That's something that's actually... Oh, there's the sound. We got something that's actually apropos for the day.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we'll do our news in just a minute. We've got Stan on the line from Atlanta. Hot Atlanta. Probably not hot today. How you doing today, Stan?
Oh, I'm doing great. How you doing?
Fantastic. So you want to look at Dries, which is a bulk shipper. My question to you is, have you looked at the Baltic Dry Index?
Yeah. It looks like it's trying to break out of its trading range for the past, since this month started. It's at 5 1/4.
You mean just this little sideways action here?
Think?
Are you there?
Like a loss. Yeah, I'm here. Are you there?
Yeah.
Oh, okay. Yeah, I was looking at dry ships. I'm holding the stock. It looks like it's trying to break out today. It's at 528. Looks like it's going back to 7 to me. What do you think?
This one is one incredibly tough stock to time because it's heavily manipulated. They've reverse split this thing down to where there's like one share of the stock. I mean, I think at one time there was like 1 billion shares, and this thing's reverse split year after year after year. And what they've been able to do is, well, they drove this thing to what, $99? I almost got this, and I tried 2 or 3 times getting back into it, but I don't have the reverse split in this thing correctly. Let's see if I've got it this way. Well, anyway, they've driven this thing up and down, but all of these have pretty typical issues, and that is the reverse splits have allowed them to go back and do a lot of things that you wouldn't think possible in the stock. Just reading the chart itself, you almost tested the previous low of October 10th at $4.77 at 907. You certainly came to it with a lighter volume with 670,000 shares on February 8th. Energy is about the same on the way up, on the way down. Today you're higher, but you got no real volume, less than 200,000 shares right now. So is it just today you kind of like this last, I don't know, 6, 7, 8 trading days that went sideways?
Yeah, it's that, plus it's hit this low several times and come off of it. And all my indicators show it's heading back up sharply right now. Now,
what indicators
there was
are
an
that?
increase in the Baltic rates across all the vessels. I saw that on another stock. Baltic rate rises on stronger rates. So
yeah, I
may
think
be
the real
part of it.
Go ahead.
Yeah, that may be part of it, but it seriously looks like it's going to break out and go back up. It hit 7 last month.
Yeah, yeah,
it's headed back there.
You had a nice pop in it.
Yeah.
And it kind of gave it all back up. The problem is these things are kind of like the airlines in the 80s and the 90s. They can continue losing lots of money until they go out of business. So the one of the things I'd probably say is you probably don't want a full position in it. You probably want to do something like a half position, unless you're just trading it on a handful of days, because you never know when the bad news is going to come financially for these stocks. It doesn't look bad. At the same time,
they have pretty strong financials. They're making a profit, and insiders own 80% of the stock. So that gives me some confidence.
That's where I'm going to get back to, where this thing is heavily manipulated by the insiders, and that they can drive it a lot more than the fundamentals in the market. So I just know that they can push it up at $1, up or down $1 on any day that they want, which is like 20%, which makes it a hard stock to actually trade. The reason to be in this thing would be more that you think that the trade deal gets signed, because it's probably going to run for 30 days after that happens. I just don't think that trade deal gets signed for a while. And that continues to be an issue. You're already in it?
Oh, yeah, I'm in it.
What price?
Oh, let's see. I'm in there 517.
Okay. Well, you're in it at the right price. If the market starts moving down Tuesday, then you might have some time to wait. I think you've got fairly decent support around 510, certainly around $5. So it's not like you got to go to the ends of the world before you find out you're on the wrong side. I would love for this thing, actually a better pattern would be for this thing maybe to go up to $5.50 and then come back on really light volume and find out that you really got even better support at that 510. But it's going to be news driven, and that's the problem. Is we can look at this technically, but a trade deal says no, this thing's probably going to go down. If we hear that come back on Tuesday, that we know that they're not going to be meeting in March. So the question is it April or May? So you got about 30 days to wait, and that's the problem. How much good news and how much bad news comes out on this?
Okay.
Well, yeah, it's kind of a tough one, because it is whatever the news of the day is going to be. If someone says, even though it won't happen, that they're signing a deal next week, could this already be up to $6? The answer is yes.
Yeah.
So that I see where if you're going to be in this thing, you're pretty much in it where you have to be, but there's no real guarantees on this. That's where, when you're 100% news driven, that's it. I do like that Baltic dry index issue, though. And that is, you're down here. You're certainly not buying that at the top. So right. I like that. You haven't really had, do I have anything else? I don't have it on this. This has been where some of the bigger bounces have come, down around 600 on it. What did you see in the news that talked about which other stocks?
Ship SHIP and S-Bulk, SBLK. They're also
Ships?
up a little bit, but not as much.
What's the symbol on ships?
SHIP, I believe that's an ETF.
Oh, that's right. Okay. Well, you certainly don't have a lot of volume. You're back in the trading range as of today, which is okay. Above 50, well, right at 50 cents. Looks good. Just put a stop in. But it's more of a roll of a dice, but I think you're in the right spot to roll the dice.
Okay, thanks a lot.
Okay, you bet.
All right.
Bye.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And, of course, we got a little bit of news today.
And it's all just a little bit of history repeating.
If you ever if you ever wondered where Valentine's Day came from, on this day in 278 AD, a holy priest in Rome, in the days of Emperor Claudius II, he was executed. Not Claudius II. Valentine, a holy priest from Rome. Claudius believed that Roman men were unwilling to join the army because of their strong attachment to their wives and family. To get rid of the problem, Claudius banned all marriages and engagements in Rome. Valentine realizing the injustice of the creed, defied Claudius and continued to perform marriages for young lovers in secret. And of course, and on his way to getting his head chopped off, he wrote a nice little love letter signed Your Valentine. And somebody dug it up again in the 30s, probably at Hallmark, and made a regular institution out of it, like many things. But if you ever wondered, that's where it came from. Okay, what else is happening out here in the church of what's happening now? We've got an email from someone, Pete, asking about American Eagle Outfitters. He tested a previous high within 20 cents on about 2 million less shares on February 5th. Kind of pulling back here. Retail numbers, of course, saw the biggest drop in, what was it, back to 1990 or so. And that's kind of what pushed the market lower. There's a lot of reasons for that. Just looking at a lot of the retail stocks, though, and especially retail clothiers over the last few days, most of them have looked fairly weak. So I'm not a big fan of going long these, nor short. I like stocks that are at least 30, more like 50, and if they're 100 or more, probably buying puts on them. But certainly what we have here is just kind of a bigger trading range, and this thing's probably going to be bouncing around 17 to 22 bucks, I suspect, for a while. But the malls are not getting any more people in it, and that's going to be problematic for a long time, because this is not really an online presence kind of product. So just it, and if I could think of it, there are 3 or 4 that I've saw in the last few days that are all in this same sector. None of them look good. So wouldn't think of it. In fact, a lot of malls are going bankrupt probably this summer. And again, that's just going to cut down on the possible stores that these guys could have and actually sell stuff on. So still not a lot of stuff in here that makes me warm and fuzzy in that. We're going to get to a lot of charts, but you still have time to call me at 877-927-6648. And you can be like Pete. Doesn't everybody want to be? Okay, so let's take a look at a lot of stuff, because I've got a handful of them here. ACI worldwide, as we've seen a lot of these stocks come to previous highs and then have no juice to break through the previous high. ACI worldwide, November 8th, $30.25 on 3.1 million shares. We're not backing off on this, but you're basically having way less than 1 million shares today, 364,000, as you push back up into that high. So we continue to see these highs being pushed by light volume. As we brought up Adobe the last couple of days, as we track this, and volume is off about 25% on this leg from December 24th up to this high. Now you can see the December 3rd high of 260.72 that had 4.3 million shares getting tested with 2 million shares yesterday, giving a little reversal. And of course, looks to me like, any close below 260.72 would be a fairly major sell signal on Adobe. A&F, which is a Crombie and Fitch. Maybe this is the one I was thinking of. Just retested its previous high on November 29th, $22.17. 27 million shares. Got into it on the 12th with 1.3 million shares. So again, there's just not that much going on in these. The energy off the bottom has been very light, and the news has been bad. And I don't think that any of that's going to change anytime soon in this retail sector. Again, you can give me a call at 877-927-6648. Okay, Paul is asking about MTCH. And I think we talked about this last week. It spiked the high. He did so with a lot of volume. It couldn't hold the high. He kind of came back to this gap up and filled it. Now you're just going sideways. MTCH. Of course, this is a sector that is fairly controversial, mostly because I think this is a company that owns all the, I'll use the can't even say it, the euphemism of dating sites. Probably a little crasser word could be had. And the question is whether or not these things are ever going to make the money by advertisers, and it's going to be problematic at best. And you're only one disease or one horrible new mass shooter away from one of these things taking a hit. But, you know, you had the volume, you ran all the shorts out of it. Let's take a quick look at this and see MTCH. And it continues to have light energy. Let's see what we have for shorting. Short interest is rather light compared to this thing from about 2 weeks ago. See what the okay. Well, unfortunately, this thing, I just got the new short interest on, what was it, Tuesday for the bi-monthlies, and this thing has gone up to 13 days to cover. So I can't say, you know, this thing a couple weeks ago was 9 days to cover, still pretty heavy. In fact, a month ago it was 5 days to cover. So this thing's done nothing but get huge amounts of shorts. Now, you ran a lot of those folks out on the 7th, but I think that there's still too many in this to look at it as a possible short. Normally, the best thing to see is when the short interest drops in about half of days to cover. Actually, I can show you here. That's what it looks like. 5 days to cover on November 15th, and it actually kept going higher. I thought maybe that everybody would get out of this thing, but now you're down to 13 days to cover. I don't know what you do with that. I mean, actually, the only thing you can do is maybe play it intraday, and if a short squeeze gets started, go after it. A lot of other stocks without that high short interest. So I'd say time to look for something else. We'll be back in a minute.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we've got another emailer coming in across the transom. Jeff says, bought a few shares of this after hearing you talk about and mention it on your show a few months back. Volume has me concerned where we put a stop on it. Don't know exactly where you're in. Oh, he's in at about 158. So pretty good. Yeah, I don't think you want this thing really closing below about 166. I know that's fairly wide stop. Light volume out here. My guess is this is going to pull back to about 168 or 169. A good sector of the market, energy, actually was very good on the way up from the December 26 low, with a lot of these failed. And of course, American Tower leases towers out to a great deal of cell phone providers, and it's just going to be more and more of these towers. They're going to be much smaller. But again, 5G means that there's going to be kind of a new business in these guys, but probably a growth business for a while. So, man, just kind of keep an eye on it. But yeah, I mean, at this point, you basically you've got so much money in it that you have to have a fairly decent ability to hold it back down to like 165. So I think you got a nice run out of it. I don't know if it's an investment or if this is just a trade. If it's a trade, you pretty much got what you want out of it, which is it broke. You had a nice sign of strength on the 31st when it did break out of the high over the high of December 7th. You did so on decent volume. I mean, there's a lot of stocks out here that are not getting volume at the high and or turning back once they got it. This one's done neither, but it is up on light volume. But yeah, if it starts coming back, it's probably going to come back to about 165. So the question is whether or not you want to do it. I don't see any reason to sell it today, but tomorrow at the close, if this thing goes up yet another day on very light volume, I'd probably think about taking some off and hopefully buying it back at about 165, 167, somewhere in that range. Okay. Did we get it all? Okay. What else do we have? Just looking through my email. Okay, let's go back to some of the other ones. AutoZone had been testing the highs. We actually have a push through a 9 million, well, let's call it a 930,000 share high. That's the December 11th high at 896 on AutoZone. Today we are going through it. Looks like it's going to hold that high, but you have less than 200,000 shares right now. So you're going into that high with about a fifth of the volume right now. And that's, again, there's so many of these stocks that are doing it. I don't think that means that we flip over tomorrow, but I think when we get back on Tuesday, a lot of these very light volume pushes in the high are going to probably instantly at least come back into the trading range. Belden Cable For anybody that's in technology, the only cable for them is Belden. Kind of sound like an ad, don't I? Anyway, no one generally, at least in the television stations I worked on, would use anything other than this stuff. They had this really high-end stuff that all the engineers loved. They had the crap stuff that they sold to cable companies, because the cable companies didn't really care. As long as you continued to subscribe was the only issue with those guys. But if you were on a television station running stuff around the installation, you bought the absolute top-notch stuff, and kind of what I always liked. Testing the previous high of November 8, $57.70, 933,000 shares, with about a little less than 500,000 shares yesterday. A little bit of a pullback. You still need about a 20 cents to actually bust that previous high, though. What else do we have going on here? Boston Properties. We've talked about these retail stocks. This one actually looks like one of the better. You've been going sideways, and generally sideways at bottoms is accumulation, and sideways at tops is distribution. Especially when I look at the McCullen oscillator and some of the other ones, it really makes it look like there's a lot of sectors out there being distributed at highs, and it certainly looks to me like the property groups are one of them. What is this? ENPH, which Interphase Energy, looks like it's almost finishing up a ABC on the, or not an ABC, it's move, I guess it is an ABC, on the way back up, going up against the July 10th high at $7.60 with 5.5 million shares. You've been able to get about 2.2 million shares or 2.4 million shares as you got into that high. So again, a lot of these things are just dog tired. We'd have to have something kind of rather amazing come out on Tuesday, I think, for these things to hold. The Ensign Group, ENSG, is challenging the December 12th high. That's $48.96 with 900,000 shares. Going into it was 629,000 shares a couple days ago. Yesterday, 300,000 shares. Today, 145. So again, we're just watching how much the volume is evaporating as we get to highs in the market. Again, in the REIT business and in real estate in general, a lot of these things are showing some of the weakest stocks since May 5th of 2008. I don't think the same thing's going to happen, but I do think these things are as weak as they've been since back then. Equity Commonwealth EQC, October 3rd, $32.66, 1.1 million shares. You've been getting into this like 300,000, 400,000, 500,000 for the last handful of days. Energy off that December 26th low was not all that exciting. Let me verify that this is what I think it is. We'll take a quick look. Real Estate Investment Trust. I was pretty sure it was. Okay. 11 properties, 4.5 million square feet. A lot of it in Chicago. Maybe that says something. EW. Edwards Life Sciences. This is breaking the 175 high from September 28th. That high had 2 million shares. 2 days ago, 1.3 million shares. Yesterday, 770,000 shares. Today, 280,000 shares. We can probably see another day like that tomorrow with very light volume. So again, either you're going to have some juice on the upside, or you're going to, in this case, you've got a big gap from 160 to 163 that I think could be challenged on EW. Again, you can call me at 877-927-6648. You can email me. You still have time for the last segment of the show on Valentine's Day. Certainly you have that opportunity. Anyway, do that. We'll be back for the last segment.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Look at a couple of things out here. Again, volume fairly weak today, but probably not unexpected as we look at that. 4.7 billion shares on the CBOE unified market volume summary compared to about 7 billion shares yesterday. It looks like we'll probably come in maybe a little lighter than that if things don't change. Been kind of quiet. And again, of course, options expiration tomorrow, 3-day weekend. We will be back Tuesday. And just after the bell tonight, of course, AMAT and NVIDIA. And we didn't look at that. Maybe we need to take a quick look at the chart since I talked about it. You know, you bounced off these lows. Like I said, talk about a black box of what profit's going to look like. You used to be able to see that they could sell everything they have. The thing that it's very unknown and couldn't tell from the last earnings call too is they bought a lot of memory, and they're doing everything they can to push that memory out on cards and discount. And everywhere you look at on Newegg, there are significant price drops in it. So to me, it'd be very tough. If you just looked at the chart, all you've done is come back and handle this big drop down, the gap down of the 28th of January. That was on 62 or 63 million shares. You got about 11 million shares today as you hammer through it. You tried it on the 6, got in there with 17 million shares, a little pullback. I wouldn't be short the stock, although there is the element of surprise. Short interest is not what it used to be. In fact, it's dramatically come down, which means that the ability to run people out of this after the bell is also down. I mean, you're really significantly down on what is out there. And not a lot of people short in the last few days. So we'll see this tonight. It's what I'll be watching, but not playing. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.